Good afternoon, everyone. We're about to kick off in a second, so if you wouldn't mind just wrapping up your conversation and taking a seat. Thank you, thank you. Thanks, everyone. Well, I'm Leigh Travers, non-executive chair of DigitalX. I'm here with DigitalX's general manager, Will Hamilton, here to talk about digital asset treasuries, Bitcoin, and corporate finance. And I think with a sell-off in the market, that's in part due to some of the corporate finance practices of public companies in the crypto space. This talk couldn't be more timely. Will's here to guide us through everything to do with digital asset treasuries, public companies that are buying crypto assets, and those corporate finance practices they use to ultimately grow their treasury. Before we jump in, I just wanted to acknowledge just this absolute whirlwind that this particular sector of the market has had. From only a couple of years ago, from just one digital asset treasury company, MicroStrategy, to over 1,000 now today. This has just been a tremendous amount of growth. It's an absolute whirlwind for the sector. And ultimately what we saw recently was just too many companies raising capital to buy one asset too quickly. And that's ultimately come now with a bit of a sell-off. We're seeing who utilize some funding practices, some financing practices that are a little bit more dubious than others. And Will's here to unpack that for us. Thanks, Will.
So I think the first place to start here is what a digital asset treasury company is. So this emergence of this type of company really came and originated with MicroStrategy. They were the first ones to do it, and it was only between around 2023 to now where these type of companies have just exploded in terms of volume. In terms of the essence of what a digital asset treasury is, it's effectively a listed company that has decided to put the majority of its assets or liquid assets on its balance sheet into a digital asset. We can touch on a bit later as to what type of digital assets these companies have been putting their money into, but predominantly it has been about 80% has gone into Bitcoin. To understand why a company would do that, you have to ask the question of what is the function of a treasury, of either a publicly listed company or a private company. The function of a treasury is to maintain the ability for that company to use excess cash reserves to acquire companies, to use it for working capital, to do a myriad of things that relate to its business. But what has happened over the last 15 years, and particularly from 2020 when the US government debased the dollar and debased the purchasing power of every single dollar by about 40%, you have to ask the question of, is the allocation of my treasury, which has traditionally been in cash or in UST bills or some sort of government bond, is that actually a good way to store value for our company? I'll give you an anecdote here. So from 1916, there used to be a saying that 1 ounce of gold would get you a very nice suit and a very nice night in a hotel room. That equivalent still exists today. 1 ounce of gold will get you a nice suit and a nice hotel room. But if you had kept that dollar, if you had chosen dollars in 1916 and taken that forward today, the dollar's actually depreciated against gold by about 99.97%. So in this ever evolving world where governments are running continual deficits, and they are ultimately going to have to keep printing and printing and printing more money to stay alive and to stay solvent, you're starting to see these companies that are emerging on the market to say, we don't want to hold cash on our balance sheet. We want to hold the best inflation hedge, the best or pristine collateral on our balance sheet to combat the ever-expanding money supply. So that's kind of the thesis behind a digital asset treasury. It originally evolved as a singular type of business where they're known as pure play companies, which effectively that's all they do. They are listed companies and they use the capital markets to increase their BTC holdings by issuing capital in an accretive way that actually increases the company's Bitcoin per share. It's similar to a company's earnings per share, but just denominated in Bitcoin. We are seeing that model change quite a bit now to more of a hybrid model. And I can probably touch on that in probably the next slide.
Yeah, thanks, Will. I think one element you've touched on here is that these companies are replacing it for their corporate treasuries. We're seeing these companies replace their corporate treasury with Bitcoin. But with these DATs, we're seeing a variety of different digital assets used. What asset do you think in the digital asset sphere is sort of suitable for corporate treasuries?
Yeah, so this is a pretty clear-cut answer in my mind. You're starting to see the spin-up of other DATs that might hold Ethereum on their Bitcoin, on their balance sheet, amongst other tokens. But as I said, the majority are Bitcoin-based. And the reason for that is because Bitcoin solves one problem that is affecting the entire world, every single jurisdiction, and the nature of how financial markets are actually governed. The underlying architecture of how money moves in the world, how it is created, all runs on the same system, irrespective of the country it is. So there's a government, there's a central bank, and then there is basically you have these governments that are running continual deficits. That money needs to be issued or be bought up through the issuance of bonds. The Federal Reserve buys those bonds, and you get into this Ponzi-nomic loop of its own country buying its own bonds. This exists, as I said, everywhere in the world, and so Bitcoin fundamentally solves this problem. It's a multi-quadrillion issue that it's actually solving.
Excellent. And in terms of these treasuries, are you seeing more of a rise of, say, the Tesla example, where public companies are buying, a small amount of their treasury with Bitcoin or a digital asset? Or is it a case that you're seeing them sort of go more all into the Bitcoin digital asset sphere, where they've got, I guess, digital asset operations, digital asset services? How are you sort of seeing this transition? Is it more at a token level or at a business level?
Yeah, I think the landscape's quite varied, but the majority of the companies right now that exist in the digital asset treasury space are predominantly focused on their treasury. I think that business model is certainly evolving because you're starting to see some companies trade at a discount to their net asset value. You see the likes of Tesla, for example. They have a massive operating side business, and they've bought Bitcoin on their balance sheet. So that's more of a strategic move. It doesn't really move the needle for them per se. But we're certainly starting to see the viability of these companies long term, because we believe in the thesis that Bitcoin is the most pristine collateral going forward, that you actually need to have a free cash flow generating operating business attached to it, so that it basically gives analysts at these broking houses and these wire houses the ability to value you on a free cash flow basis as well as your net asset basis. So yeah, look, I think going forward, the combination of a treasury and a fundamentally strong operating business is certainly the preferable choice.
Thanks, Will. And I think the data here you've shared 172 public companies that hold Bitcoin. I think that number's larger now. We're not seeing anywhere near these sort of numbers in Australia. We've seen these sort of numbers in the US, some other overseas exchanges. Where's sort of Australia sitting in this mix?
Yeah, I think Australia is certainly, traditionally it's always lagged the US in terms of regulations by about 2 years. And in terms of bullishness around the space, it's probably still lagging. But in saying that, Australia has naturally had a deep affinity for gold, and particularly gold mining stocks that are, what's the term? I think it's called drill and hope. So just empty mining tenements, and they drill, people throw a ton of money at them and hope that they hit a strong assay of gold. So I do believe that that part of the market will eventually start to open their eyes and see the same linkage between gold as a hard money asset and Bitcoin. They're both in the same space. It's just a matter of education and getting the regulatory guidelines around this space a bit more firmed up, and I think we'll start to see advisors offering it.
Excellent. And you touched on advisors offering that. What's the sort of perspective on financial advisors in Australia? You know, these are advisors that are advising on investment portfolios. How are they leaning towards, say, digital asset treasury companies or crypto more generally?
Yeah, from probably 3 to 5 years ago, they weren't curious. They were just skeptical at best, and kind of left it at that. No one really wanted to touch it. Where at that point, it was certainly more of a career risk to get into that space. We're starting to see now that not getting into that space, not advising on those products, is becoming a career risk. So, look, if I mentioned the US earlier, if you look back at the likes of BlackRock, Fidelity, some of the largest asset managers in the entire world, these guys are modeling and allocating or recommending to their clients that they put 2 to 5%, and in some cases 8% of a client's portfolio into Bitcoin. That doesn't exist at the moment yet in Australia, but it's coming. You have to look at these things in terms of understanding what has happened in the past and projecting the reality of the past from, say, 2017, where the thought of having a spot Bitcoin ETF that was just kind of crazy. The thought that it would be the best and fastest growing ETF in the world, being BlackRock's, was unimaginable. The thought that a government might buy it and put it on their balance sheet was just crazy. So if you extrapolate what has happened over the last 5 years and push the reality of that forward, I think it's safe to say that this train really can't be stopped, and it is coming to Australia. It'll just take some time.
Yeah, I like that thought, that train that keeps on moving. And I think in the midst of a drawdown like we've seen more recently, it's worth sort of looking back on what has been over the last few years. And I think that positive trend will continue, and certainly Australia has a lot of work to do to catch up to where the rest of the world has been in terms of their adoption towards Bitcoin and digital assets more generally. But back to sort of the corporate finance element around some of these public companies that are acquiring digital assets, acquiring Bitcoin. You know, what are some of the structures they're using to raise money? Is it simple like an IPO or a placement? Like, how are they continuing to raise more capital to buy more digital assets?
So myself and Lee actually used to work in the same team at Animoca Brands about 6-7 months ago, and we used to see these deals come across our table like something I've never seen before. There was like 5 deals a day from Switzerland to different parts of Asia. These small shell companies that were getting reverse takeovered with huge amounts of money to go in to buy an initial amount of Bitcoin. That was usually done in the form of a PIPE, which is basically an equity raise. And then subsequently, at the time, the market was trading where the underlying market cap of the company was trading, say, 2 times or 3 times above the net asset value of the Bitcoin value itself. So what they were doing, they were basically the companies were issuing more stock into the market through a facility called an at-the-market facility. It's there in the second circle. It's called an ATM. But basically what that let them do was buy more Bitcoin relative to the actual market cap that they had at the time. So that ability to do that has kind of dried up a lot since 4 or 5 months ago. And the second opportunity was looking at convertible note structures, so convertible bonds, whether that be traditional based in US dollars or Australian dollars or Bitcoin denominated. We've seen a bunch of them come out, and they vary from very, very predatory bonds that are very poor for the company. There's a couple of companies out there that have taken out very badly structured bonds. I'm not going to mention those names, and there's been some good ones as well. But effectively what that allows the issuer to do is increase the company's Bitcoin per share through the structure of the note itself. And then really the final boss of this capital cycle is the preferred stock, which I'll touch again on in the next slide. But basically it is a company issuing another form of their stock, but it's effectively a credit piece. So they will issue the stock and they will issue it to investors and guarantee a coupon or a dividend of 9%, 10%, and potentially with the ability with an embedded call option in it to convert that to the headstock. MicroStrategy are far and beyond the leader in this space, and I can happily touch on that on the next slide.
Yeah, well, MicroStrategy, I think, was the pioneer in this space, and some of the recent structures and offerings they have are not really crypto related at all, it seems, and they're being taken up by financial advisors just purely for the yield. But there's also quite a lot of misinformation about those products. I've had recommendations to buy some really exotic structures around MicroStrategy from some people doing renovations at the house at the moment. So yeah, in terms of what people need to know about these particular products, can you give us a bit of insight on this one, Will?
Yeah, so first of all, you need scale to be able to issue preferred stock. MicroStrategy have about I think it's around 600,000 BTC on their balance sheet. And that scale allows them to issue preferred stock because they are heavily over-collateralized in terms of the debt obligation that goes along with the issuance of those preferred stocks. So what they've actually done, MicroStrategy, they've taken the view of we're short the dollar, as in we think that the dollar is going to be continually debased, which it has been since 1916. It's been debased every single year on an annual basis by about 6.9%, meaning the purchasing power of your dollar has been decreasing just purely by money printing by 6.9% every year. And so what MicroStrategy's view is, we don't like the dollar. We know that they're going to continually print their way out of trouble. It's political suicide not to. If there's a crisis, they print. So they've issued out these products called preferred stocks that allow investors to invest in them, and in turn the investors get a coupon, and in some cases the ability to have a call option to convert that stock into the headstock of MicroStrategy, or strategy in this case. What they've created here is effectively a yield curve, which is that graph that you can see on the screen. So at the front of it, just to give you a bit of a context here, this is their new product called Stretch, the STRC. It's a monthly product that offers investors a 10% dividend on a monthly annualized basis with no call option embedded in it. And then you can go all the way down to a more riskier product like Strike, where the coupon is lower, but you have the ability to actually have more upside in the appreciation or depreciation of Bitcoin as a whole. So they are the first to do this. No one has ever done this before. But they have taken this macro view here of we don't like the dollar, we want to be short the dollar, and we want to suck up as much capital as possible from a different type of investors that will be attracted by the products that they actually are offering.
Okay, yeah, thanks for running us through that. And I think my one takeaway from these sort of structures is saying that the rise of digital asset treasuries, buying Bitcoin, is far from over. There's plenty more buying to come.
Yes, I would agree. So, a lot of people here, if you follow the space closely, you might think that, this is the first time there's been a compression around like the MNAVs or the abilities for these companies to raise money accretively. That's not actually the case. It happened in 2022. The only problem was that there was only one company in the world that was doing this. So it never ever caught any headlines. No one ever spoke about it. Only until recently, I didn't actually realize that had happened to MicroStrategy. So this is a cyclical event. And so just to give you some context, if a government or another sovereign nation came out and issued or bought Bitcoin on their balance sheet, I can not guarantee you, but I'm pretty confident that all of the ability to raise capital in a creative manner would be there. Luxembourg recently have come out and put it on their balance sheet. New Hampshire, the state of New Hampshire in the US, has just issued a $100 million Bitcoin bond, which is kind of amazing. And this goes back to how the US is quite in front of us, but I can just see this steamroller continuing on, and it's just going to take some time.
Thanks, Will. And DigitalX operates as a Bitcoin public company, and it also has a Bitcoin ETF. So what's the sort of differences between the two?
So a spot Bitcoin ETF just gives you a one-to-one exposure to the underlying of Bitcoin. Holding it through a structure like we have at DigitalX gives the individual a lot more safety and comfort around the custodial responsibilities for that. The last thing you want is to end up like that guy in the UK that spent $80 million digging up a landfill trying to find his hard drive that had I think it was hundreds of millions or billions of dollars on it. So he lost his seed phrase. You don't ever want to be in that position. You'll probably end up divorced or who knows. That's effectively what a spot BTF offers in terms of its pros. The downside to it is it doesn't offer the ability for the operating company that may operate as a digital asset treasury company with good management, good financial products and services to be able to get or earn the individual investor more Bitcoin for every share that they have. And that's really the pro of a digital asset treasury company. Digital asset treasuries are connected to capital markets, and where the ability is on and live in the market, we have the ability to increase investors' Bitcoin per share. A spot Bitcoin ETF doesn't do that. So it depends on the investor's appetite to risk and their ability to judge management of that digital asset treasury on a longer term horizon.
Avoid divorce court, buy our Bitcoin ETF. Is that the new marketing slogan?
Buy the headstock or buy the ETF and avoid a divorce.
Thanks, Will. That's fantastic to sort of jump into some of the big topics in digital asset treasuries, and I certainly learned a lot today. Thank you.
Thank you.